What is the banana singularity and why are we all saved?
Okay, so that is just the phases of how the banana zone tends to play out. You tend to get the first spurt. Bitcoin went from 50,000 to 100,000. It then corrects a bit. Everyone freaks out. I mean, it's ridiculous. I mean, it's literally ridiculous. The people freaking out from a correction like this. And then you usually get the alt season part. And that's when any moron can make money, including myself, in anything that you hold. And that is the alt season. That usually, in full throttle goes through till, let's say, April. And then it tends to get more selective in the final phase where they concentrate on the key themes. That's my general thesis on all of this right now. This is pretty much playing out exactly as I've been expecting it to play out. And whether that's in liquidity terms, because it's a rerun, because we've got this debt cycle, it's the same bloody thing, right? So that's my overall view. It's like, it's all fine.
Raoul Pal explores the current market cycle in detail, breaking it into distinct stages that can be taken action on. He clarifies that Bitcoin's possible rise from $50,000 to $100,000 is similar to past trends, with inevitable falls that frequently weaken investor confidence coming after. Pal describes this erratic stage as the banana zone, when market noise obscures logical judgment and emotions take over. However, he highlights that these adjustments are an essential component of the cycle, frequently paving the way for a huge cryptocurrency season in which even little enterprises may make substantial profits. In this video, we explore Raoul Pal's most recent analysis of Bitcoin's place in the changing financial system. Make sure to subscribe to the channel, like this video, and enable post notifications to receive future updates on cryptocurrency and market observations. Thank you for watching and enjoy the video.
So everybody's asking about, I put a big thread about it yesterday. Has the market topped? What's going on? Is that M2 chart going to play out? Are we all fucked? Is it going down to 75,000? Yada, 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 yada. I mean, it's all day. And then it's like, oh my God, the Fed aren't going to cut rates. That's the end of the market. They can't, just so much noise. What I urge people, I wrote it, I think, in response to you, Ov, is 2017-16 was a near identical setup. So the market has been following the pattern. But outside of that, Trump got elected. Everyone went, oh, it's tariffs. They're inflationary. The dollar screamed higher. Rates went higher. And then what happened was Trump came in and said, we need to get a lower dollar. Scott Bessent's already talked about it. The other guys coming in as the Economic Council guys already talked about the dollar being a problem. So I think they're using the dollar as the stick and will then offer it as the carrot to the Chinese, the Canadians, the Europeans, and everybody else, which is, if you agree a trade deal with us, we will help lower the dollar. The dollar is a function of liquidity, which is why rates are so bad as well. There's actually not enough liquidity in the system. And I think that's sort of somewhat purposeful overall. But if we go back to 2017, and we had that setup of the dollar turning over and then rates actually came down for the rest of the year. The other thing, the Fed were raising rates all of 2017 and crypto went up.
Yeah.
US M2 went down. So all of the things you would be looking for, they were all in reverse. So what really was happening in 2017 was China had been beaten up by the strong dollar in 2015, 2016, and their economy was super slow. China increased the balance sheet and the Fed lowered the dollar. The Europeans did some QE. And the UK did some QE. We got a near identical setup. The market is over extrapolating tariffs and fears. Whatever rates do is irrelevant. It's what global money supply does, not global money supply, global liquidity does going forwards. We know back in 2017, the Treasury drained the TGA for the same reason. I mean, it's like literally everything is an exact rerun of what happened. So look, I don't expect an exact rerun this time, but probabilistically speaking, there's nothing to be concerned over. Now, when we looked at that big M2 drop last time around, and this time around, it leads by about 12 weeks. So last time around, we had an identical M2 drop. You can see it. I don't know if you can share that chart you're looking at now after that one. This one shows the near identical pattern in M2 back then versus now. What happened was the dollar weakened, global M2 went up. What also happened is the NASDAQ had a similar correction, crypto very similar. And what crypto did was didn't follow M2 going forwards because it starts to decouple as the bull market takes place. And what happened was it did an 8-day correction and did negative 35%. This time, it feels like it's slightly more sideways. Whether it goes a bit lower or not doesn't really matter. But the point being, you're looking for the bottom as opposed to a sharp acceleration from here. But either way, it's over pretty quickly. And then what happened last time around is the moment Bitcoin hit a low, alts took off. And so that's my general thesis on all of this right now. This is pretty much playing out exactly as I've been expecting it to play out. And whether that's in liquidity terms, because it's a rerun, because we've got this debt cycle, it's the same bloody thing, right? So that's my overall view. It's like, it's all fine. It normally decouples at this point in the cycle anyway, because it starts forward looking. Now, liquidity is actually financial conditions drive liquidity. And so crypto's been following financial conditions. So it suggests that liquidity comes back. So, but then in the full bull market phase, it normally does decouple. So I don't think it's doing anything unusual whatsoever. And, you know, we're now a $3 trillion asset. You need more institutions in to drive the asset higher anyway. You know, people forget that. Like, the institutions here, it's amazing. Well, it has to be. If you want 100% rise, you need larger pools of capital now because it's a much bigger market. So, and over time, I think, yes, we get product market fit. I don't think AI is the product market fit currently. I think that's all narrative based versus the reality of where it is. But look, overall, the trends are all right. And we haven't even got the bloody administration in yet. We haven't got the clarity that we're all waiting for. And everyone's at kind of a max fear right now. It's crazy. But that's a good setup, right? It's just a good setup for the year.
Raoul Pal draws attention to the persistent economic conflict between the US and China in order to illustrate the crucial influence that geopolitical dynamics have on the markets. He clarifies that China's present economic stimulation efforts are strongly linked to the value of the US dollar, a problem it previously encountered in 2017. Pal believes that a concerted effort to devalue the dollar would be the answer, allowing China and other countries to add liquidity to their economies without risking currency instability. One of the main components of the broader market story is this geopolitical chess game, as he puts it. Raoul highlights that the U.S. Treasury's choices over currency policy and liquidity injections will have a significant impact on how the world economy develops in the years to come. Now, let's get back into Raoul Pal's insights and learn how to navigate Bitcoin's highs and lows with a smarter strategy. Don't forget to like, subscribe, and enable notifications for more valuable content.
No, I think the business cycle is still not above 50. It will go above 50. That means corporate earnings go up, and then we get rid of that bifurcation between the tech stocks, which are cash flow driven, zero debt, and the regular economy. That gap closes because earnings grow. Earnings grow, household earnings grow. Household earnings grow, investment goes into markets. So that virtuous cycle is all the same cycle across all assets. The next phase of this, we will see the cyclical plays, the commodity plays, all starting to rally as the global economy starts to recover. So that's all to come. The ISM is still below 50. I think the Fed will continue to cut rates, and that's okay. But really, it's down to the US injecting liquidity to weaken the dollar and jawboning it lower. Because if the Fed come in or the Treasury come in and say, you know, we believe in the strength of the dollar, but it's too high for growth right now, whatever, that's enough to turn market participants nervous. And then all you need to do is inject liquidity through various mechanisms to force that to happen. Don't forget, we got a $700 billion drain of the TGA to come as well. We've just drained the reverse repo. So they're going to have to stop QT as soon as they finish the reverse repo, which will be by kind of Feb, maybe. So then you're ending QT, injecting liquidity from the TGA. They've already mentioned who was it? I can't remember who it was. I think it was Powell at the last Fed meeting said, we don't want to have to tighten liquidity on the rebuild of the TGA. That was a signal that everyone missed. He said, we understand draining the TGA is liquidity into the system, but we don't necessarily want to tighten again once we have to rebuild it. So that's telling me it's probably QE. Now, maybe it's not QE, maybe it's QE by a different name, but I think they all know the game. The other thing that's interesting about this cycle is the best indicator for almost everything in the world is the ISM survey, you know, the business cycle. The ISM is still not above 50.
Yeah.
And, you know, back in 2017, it had come 50, but by about Feb, March, it really started accelerating. So we haven't even had a business cycle yet. Now, what's interesting is the best indicator of when you should be looking for a top in crypto is when the ISM is peaking, because that's when liquidity starts changing. Now, that happened really early in 2021 because of the pandemic. So it happened in March 2021. 2017 didn't happen until the end of the year. I think because ISM has been so low this year, there's a chance that this thing doesn't peak until Q1 2026. So it's a slightly different cycle, but we're just not even in the ballpark of looking for a larger top. The China game here is really clear. They cannot stimulate because the dollar is too strong and they'll break the lower bound of the yuan, right? They just can't do it. It's exactly what happened back in 2017. What they need is the US to weaken the dollar, then they can stimulate. They know it. Everybody knows it. Yellen knows it. Scott Bessent will know it. That is the game. And the game is, we will not give this to you until you agree tariffs, and then they'll give it to them. And that's exactly what Trump did last time. So really, they will stimulate massively. They have to. They've got a full-blown debt deflation going on, but they can't do it without losing their currency.
Raoul Pal provides a deep understanding of the complex dynamics of the world's markets and economy. He clarifies that the ISM survey, which is currently below 50, indicates that the business cycle is still in its early phases. According to this indicator, household incomes and corporate profits are expected to rebound, paving the way for a positive feedback loop in which market rallies and investment are fueled by economic expansion across a range of asset classes. Raoul highlights how important monetary policy and liquidity injections were in promoting this recovery. In order to allow China and other economies to stimulate without undermining their currencies, the Federal Reserve and U.S. Treasury must work to weaken the dollar. He makes comparisons to 2017, emphasizing how comparable tactics were used to handle the world economy's problems. Furthermore, according to Raoul, the United States will eventually stop quantitative tightening and transition to a liquidity-driven environment, which may include actions similar to quantitative easing but with a different name. The system will probably get a substantial amount of liquidity as a result of this change. The closing of the Treasury, general account, and reverse repo operations, which will fuel the market's further expansion. Ending on a strategic note, Raoul underscores the geopolitical chess game between the US and China. He explains that China's ability to stimulate its economy hinges on a weaker dollar, but this concession may come only after negotiations on issues like tariffs. Thank you for watching. Don't forget to like, subscribe, and share your thoughts in the comments below. Your support helps us bring you more insights like this. Stay tuned for more updates on the ever-evolving world of finance and macroeconomics.